So from a storytelling narrative point of view, you normally buy a second property or third property, obviously for investment. Now you would naturally need to collect rental, ensure that your rental pays your mortgage, for instance. So in this particular case, it's just a fraction, so it wouldn't hurt you to be able to get a certain return twice a year, every 6 months. This return is essentially can be considered your renter, for example. But unlike any other return, this doesn't have any operational costs because there's no hassle. You don't need to worry about changing light bulbs and dealing with tenants and all that stuff that you have to go through. You just essentially look at it as an investment, which means that in the property space, you would undergo the exact dynamics of property investment, which means that you enjoy the upside, which is always good news. And obviously, you have to take the downside as well if the market falls. Simply because if you have bought on a fractional basis, it's much larger, right? But it's still a fraction of that asset that I explained much earlier. And you obviously invest on money you can afford to invest. And as the asset is secured, so it's safe, it's secured, it's not something that's not secure. At the same time, if you do need to get out before the investment period largely, depending on which asset, is about 5 years, which is quite a standard time horizon for most investment. So assuming you need to get out within 5 years, you need to find the liquidity to get out. So there will be secondary market that you can look at. There is also SDAX, or the so-called the tokenized market. So as explained earlier, you would then be able to digitalize it to sell it faster, because in SDAX, they do it at 1,000 a piece. So by doing it at 1,000 a piece, you obviously can get it out faster, faster time, less cost. And of course, it's something that is like what they mentioned. I mean, there's a lot of liquidity, it's tradable, and it's something that is also lower your cost of transaction. And having said that, it's immutable ownership. So I think that's the how should I put it? That's almost correlated. It's almost I would use the word indivisible. Indivisible in the sense that everything in property within the space, it all works that way. Whatever your option, if you want to take the so-called the fractional so-called approach or outlook, which I think Prof has also explained the various parts, whether it's a REIT or some other direct investment. So I think it's really exciting, as what Elaine said. So, but you want to do the physical space, nothing stops you. You still need a home to stay. You still want to rent out, collect the keys, deal with tenants and all this stuff. I think, but that's your choice. So we hope this would really grow. I'm excited that some of the reference I'm reading for the first time myself, that is targeted to hit in 2025, 268 billion. I think that's something that's really exciting. And I think Elaine showed the chart earlier about the response to accessibility to fractional. It's the classic 80-20 response. 21% say yes, they have access. The other 53% say no. Another 26% say looking for options. So it's a clear 80-20 situation. So I'm excited, even just this evening, sharing what we're doing. So as such, it's important that shareholders who are interested to actively engage with the company should register themselves in the shareholders club. And other than the objective of actively engage the company, we also hope to be able to educate shareholders who are keen to know more, to learn more of what we do, given the diversity of what our business are, the investment that we have undergone. And last but not least, we find that shareholders will have the unique opportunity in the case of the Straits Trading Shareholders Club to be able to co-invest with us. So by co-investing with us, we're not asking you for 100 million or something. We're just asking you to obviously remain as a shareholder and just participate in offerings that we hope to provide. So this bond gives start to the fact that most shareholders are quite keen to get involved in property. And the tokenized property space during the same time was also in play in many parts of the world, largely in UK, where I visited to try to understand more about the business. But we felt that in the case of Straits Trading, we could offer something really unique. So we have always explored many ways of doing things. So the foundation and the thinking of what Straits has gone through is that when it was taken over by Tricity Group, which is chaired by Ms. Chu Kay Kim, a very dynamic chair lady, we always try to look at things that can be prioritized, what is most important, and also looking at the fact that we could securitize things, focus on sustainability, focus on long-term, And also, last but not least, look at the fact that you can be a small fish in a big pond, not necessarily a big fish in a small pond. So in a roundabout way, if you own any token asset or fractional asset, you're quite a small fish, right? But it's a huge pond you're in. It's in the real estate space, right? So, and actually, realistically, to share with you this example, we put it to the test when the company went through the transformation in the last decade. We should call it 4.0. That was to securitize most of the diversified investment that we have in the organization. Now, taking the example of property, just for the sake of time and also to explain to you, to link back to what we are doing now, if you look at the space of real estate, we took the Straits Trading building. Sentimentally speaking, it's the name Straits Trading there. Emotionally speaking, it is something that you, like your property that you keep at home, you want to keep it for your children, for the next generation. But clearly, as a listed firm, where you have to pay dividends, your income are only in one way or two ways. One is obviously the rental income. So quite likely, you can project the rental income for the next 10 years. And at the same time, if you were to sell it, obviously you get a capital income, same as what you do with your own home. And the cost, needless to say, will be repair, maintenance, and capex. So it's really very simple, right? It is very simple. Okay, so we decided in 2014 to put it for sale. And at the point in time when it was transacted, it was the highest in the market. It was sold for about 450 million. It was quite controversial in the sense that, why would you want to do that, right? Well, very simple, because you want to securitize it. And then what you get is you're able to have the liquidity to reinvest, to redeploy, to recycle, right? You can't do that if your building, if it's not movable, it's not liquid, you can't stay put, right? So obviously by doing that, you're able to continue your extension of your business so long as you stay in the property space. You don't go to oil and gas or do something that you're not familiar. So obviously we stay in the property space, we stay in investment in a commercial area, logistic area, of course, residential area, and the office. So we formed a company to do that. In fact, we formed two companies to do that. One is SRE, Straits Real Estate. The other one is SIM, Straits Investment Management. Straits Real Estate look at the private equity space, and Straits Investment Management look at the public equity space, meaning that if we were to invest and to look for property to buy for private equity investment, if we didn't secure the property, not all hope is lost. We can always get our SIM to buy the public equity space. So the listed company owning that property, we can invest. So it's quite simple in the sense that you want to get the best value out of the asset. Now, assuming you have gone into the private equity space, which is the case of SRE, we were very blessed. And of course, the track record in the last 7-8 years have bear a lot of fruits. We are actually out of the 450 million asset that you talk about. Today, I'm very proud to tell you it's about 2 billion, okay, or 2.5. Of course, asset valuation moves up and down. Okay, so you would be thinking that, wow, 450 million and 2 billion, right? How is it done? Again, just to recap, it can be done if you were to take the asset in the liquid form instead of the building itself, which you can't squeeze it dry. You want to take the liquidity and invest it very prudently, risk-adjusted return. You recycle it, and each cycle you're able to have a higher ROE because you are leveraging on the investment, but you're still staying in that space. Okay, and we have been very blessed. We've done very well. We've spread out the investment throughout different forms, and the business and the company has done very well. So in this decade, we see no reason why this can't be done. Like in our investment with SDAX is a good example, because as what Rachel has mentioned, I think she hits the nail when she showed a chart that shows what's the benefit of the trading characteristics of SDAX.